Hello everyone and welcome to Swing Trading Channel. Today we're going to talk about the US dollar, we're going to talk about gold and silver, a couple of miners and the market in general, the S&P 500 and also oil. So let's start at looking at the US dollar, and that's a weekly chart of US dollar. And as you can see here, in 2012, 13, and mostly of 14, the dollar was trading in a range, and it's a kind of big range in the beginning, from what 79.80 all the way to 85. So 10% move up and down is a big move when it comes to currencies. And I was doing it very quickly in a couple of months, up and down, up and down. Then in 2014, the end of 2013, the beginning of 2014, for a year, it was trading very badly, very low range, and it looked like it was going to go down. Everybody was betting that the US dollar is going to move down. Everybody was in this boat. And then what happened? It didn't move down. And when everybody is wrong, then this happens. So this actually is the result of everybody being on the same side of the trade here, and then realize that they are wrong, so everybody wants an exit, so they push anything higher like this. Also, you have to put in mind, well, actually what started all this was the Japanese yen. I think his name's Abe, in the Central Bank of Japan, start printing money like it's going out of style, and I think he's gonna get his wish and it's gonna go out of style, but not now. They still have a few rounds of QE to go. Then the euro start going also down, so people have no choice but the US dollar. Those are the three reserve currencies right now. The US dollar mainly 60% or so, and then the euros and Japanese yen. There is no other currencies to keep as a safe haven anymore, except those three. So the dollar is going down, and I think it's going to keep. The dollar is going up. I'm sorry, and I think it's going to keep going up. It looks like it want to reach 100. Look at this. This is a weekly chart, and from maybe June or July of last year, it just went straight up. So for 6 months now, or maybe more, for 6 months, it moved down only for 1, 2, 3 weeks. That's it. Less than a month out of 6, 8 months. That's a big, huge move. So it looks like it's gonna go up. The Federal Reserve are they gonna raise rate or not? We do not know. There's two camps right now. People saying that the economy is great, and people are saying the economy is not that great. Which camp are you in? It shouldn't matter which camp are you in when it comes to your trading. It should matter when it comes to your long-term investment, your preparedness for what is going to happen. I'm in the camp that's saying everything is just gonna go blow up. I have my tinfoil hat, on. It's not really snugged in yet, but it looks like I'm gonna snug it in very soon. But it doesn't matter. People will look at something, and according to what they want to believe in, they will make that thing fit their vision. If the economic data is coming out and you believe the economy is bad, you're going to look at it and find something bad. If you believe the economy is doing good, you're going to look at it and find something good about it. So it doesn't matter now. People are going to believe what they're going to believe. That's why people who watch Fox News keep watching Fox News. People who watch CNBC keep watching CNBC. They don't watch both to figure out what the reality is. No, they are believing in certain reality, and they're gonna listen to people who enforce this reality. They are not gonna challenge what they believe in. Most people do this. Only few people, try to find out what the real truth is. So, for now, people believe that there is economic recovery. One day they're gonna wake up and with a slap in the face that there is no recovery, the same thing that happened in 2007 and 2008, and it's gonna be a harsh wake up. But you cannot change their mind. So if they're gonna look at this economic data and say this is good news, there is nothing you can do to change that. So for trading, you just have to go with the flow, what people believe in. They believe there is economic recovery and that the Federal Reserve is going to raise interest rate and everything is hunky-dory and this is what's happening, then you just have to trade that. So this is the weekly chart for excuse me, US dollar. Let's look at the daily chart. We're just zooming in now. First, from August of last year to today, January 21st, and what's happening is just we see that it is rising too fast. That could be a problem. Not necessarily will be, but it could be a problem. You see here the MACD with moving lower, with the dollar moving higher. The same thing here in RSI. And this usually, is a warning sign that maybe a pullback is coming. But it didn't happen. It kept rising. And then now the MACD is turned and the RSI turned. That's why I always say the indicators, you do not depend on indicators to take trading decision. The indicators are just there to tell you how strong you should be committed to this trade. And as we see here, it was wrong. It gave you a false signal that it might go lower, and it didn't. That's why I'm suggesting it's going to keep giving even more higher. I prefer to see actually the dollar trade sideways, for a while, for the 200-day to catch up. It just keep rising farther and farther and farther away from it, and sooner or later gravity has to do its work and bring it back down to at least test the 200-day moving average. But this could take 6 months from now. Who knows? We will know in hindsight what will happen. So now the US dollar is moving up, the euro is moving down, the Japanese yen is moving down. It's stabilized. The Japanese yen is stabilized. It hit 120, went up to 121, and it's stabilized now. And I heard in the news that, the Central Bank of Japan is saying, no, we had enough of QE right now. We have to wait and see. We're not going to increase it. They're still doing it. They're just not going to increase it. So this might put the brake a little bit on the Japanese yen falling. But now the other side is the euro keep falling down. Tomorrow we're going to hear from the European Central Bank, Mario Draghi there, is going to tell us what he's going to do. They leaked some information today saying they reach a deal of 60 billion euro or 600 billion euro a year. I can't believe people are talking those numbers that easily. A few years ago, if you told anybody's gonna a central bank is gonna print that much money, they're gonna think you're crazy. But here we are talking about it, and I cannot believe it. 600 billion euro every year, but whatever it takes, right? This is what he said before. We have to wait and see what the Germans are gonna do about this. Is it gonna be really that? We do not know. And more important than that, what is the market reaction? This is more important than the action itself. I don't care what the Euro Central Bank is going to do. I care what the market is going to perceive it as. I could, think that it is the wrong thing to do, but the market think it's the right thing to do. Then I'm just going to go with the flow. I'm not going to say, no, this is bad, I'm going to short. No, I'm not going to do this. I'm just going to wait and see what the market is going to do. Do not try to front run the central bank. It's just dangerous. You think that, Mario Draghi and people in the central bank did not speak with the central bank here in the United States, and Goldman Sachs and JP Morgan, officials don't know already what's going to happen. Of course they know, and I'm pretty sure they kind of positioned themselves towards it. And the reaction that might happen is the total opposite of what you think is going to happen. So just wait and see. Tomorrow is not that far. Just go to sleep today and wake up tomorrow. You're going to find out what happened. And if the market perceived it as good news, and the euro start moving up, the dollar start moving down, the market, how it's going to do, then we're going to find directions, and we're going to find a better trade to do. This is what I think we should do. Now, usually when the dollar goes up, gold moves down. And this has been the scenario for the last 2 years, but it is not the case for the last maybe 2-3 months. The gold has been going up, reached 11, I think, in November of 1140, and has been moving up since then. So it moved up around 1140 to 300, around 160 points. A nice big move, but there is a lot of people who are in pain when it comes to the gold trade. Everybody who bought here is in pain right now. All those people, are they trying to get out when the gold price is going up? What they're gonna do, we do not know. So the best thing now in gold, we missed this move, right? By the way, I do not believe in trading gold, because it just, I'm not trading futures. And if I traded GLD, if you looked at the chart of the GLD, it just keep, gapping, because GLD opens and closes with the stock market in the United States, while the future market is open 5 days a week. So you're going to find those gaps, and I don't like to trade anything that gaps. I think gold, you should be like your own central bank. Central bank is not keeping gold reserve. They're not tying their currency to the gold anymore. You don't have a gold standard. It doesn't matter. You can have your own gold standard. Fine. What do you think is a good gold standard for the dollar? Is 20%, 50%, 60%, 10%, whatever it is you think, buy 10%, see how much net worth you have. This is what I am doing. How much net worth I have. I'm not counting my house, because my house, I'm not treating it as a net worth. This is a place I live in. It's not something that I'm planning on cashing and living off it. So don't count your house if your house is paid off. Just see what everything is, what is your net worth is, and see, maybe 20% of that, put it in gold, and don't put it all at once, just, little by little. If you want to do this, and this is what I am doing. But anyway, that's another story. But here, gold is moving up. Let's look at the daily. If we look at the daily, there is a pattern of inverse head and shoulder here. This is the right shoulder, head, left shoulder, and that's the neckline. I don't like that the head and this shoulder is lower than that shoulder. The more ideal is that this shoulder to be right here, but this is not the case. So we're dealing with what we have. So now, how do we know? What do we expect from gold? What do you expect from gold? You draw a line from the bottom here all the way to the neckline, and this is what you expect. So around 1350 should be your expected measured move. Now, funny, because 1350 to 1400, this area right here, is gonna be a fight over here. It's gonna be, people who think that this is top of the range for gold and is gonna move lower from here, they're gonna start selling. And people think, no, it's going to go higher, and they want to front run this pattern, and they're going to keep buying. So we're going to have a fight here between 350 and 400, and I'm expecting, when it comes to this area, just, to be on the sideline and do not trade gold. I don't trade gold, as I told you, but, there is a couple of miners that took a big beating, and I think the chart pattern looks good, so I'm buying some here. This is the GDXJ, which is the junior miner. You see here the same pattern, more or less. You can just W bottom here, and here if it start moving up, and this is like what, 29, your next resistance is about 38. It's not bad move for, you know, $7-8 with a stop, and it's very important to put a stop below, you know, today's low or something. You have to find out first if it's gonna move higher. If it kept moving lower, I will wait. I'm gonna wait for a signal that it broke this level, and when it breaks above it, I will buy it with a stop right here, maybe 28.50 or something. And so I'm risking what, like $1.50, hoping that it's gonna go to 38. That's not bad risk reward. The GDXJ is junior, so it's volatile a little bit. You can see here. The less volatile one is the GDX, and this is the bigger miners. It has, I think, Barrick Gold and stuff. So you can tell it already broke this line of resistance here, and it broke this line of resistance here, and it looks like it want to keep going higher to maybe 27, 28. So also we will look here. If it start moving higher, we will buy, or I will buy with a stop right here around 22, hoping to catch those $7 move. So we cannot talk about gold and not talk about silver. Gold chart looks much better than the silver chart. Silver chart still very weak, I think. It's moving higher. It's very good. It's, you know, moved from around $14 all the way to the 18.14. But be careful of the 50-day moving average. People like to sell it at the 50-day moving average. Happen here, happen here, happen here. It doesn't necessarily mean it's going to happen here, but it might. So we have to watch this 1885 level and see if it breaks above it. If it did, then it's very good news. Now we have the next level of resistance around 22, then 25, then 34. We don't want to get ahead of ourselves. Let's just wait and see what silver is going to do. But for now, it's trying to break this downtrend that it has been you know, trading in for a very long time now. I like silver. I love it, and I will be so happy for it to start moving higher. Now, the market, as we said yesterday, is trying to find direction, and it still is. Look, it has been moving up for 3 days now, but look at the volume. Is still trending lower. That's not an encouraging sign that it is the volume day after day after day. It's less and less people are committing to buy the market that's rising. That's not a good sign. So I think it's going to trade in a range right here till we find out what's going to happen in Europe, and what I think the Federal Reserve is not going to meet till February or something. So we will see what's going to happen. For now, I think this market, any bounce will be sold. If oil stabilizes a little bit, this might give boost a little bit for the stock market. You look at the chart of oil, and it just, you know, maybe Google the word ugly, and you're gonna find this chart popping up in your face. It's just a bad move. You know, the funny thing is, before oil moved down last year, start moving down last year in I think October, nobody was talking about gold, about oil moving down. Nobody. Suddenly, everybody is an expert in oil, and telling you it's gonna reach $10, gonna reach $20, $30, and everybody's giving a price. Where were those people to tell us about it before it happened? And now they can tell you why it's happening, fracking this, fracking that. Those people had no idea it was gonna move down. Nobody. I didn't think I heard anybody saying that oil is gonna move down. Didn't hear anybody. Now everybody is telling you it's gonna go to 20. And that's what's making me think it's not going to go to 20. Maybe it is going to stabilize right here. This is very big move. Look how far it is from the 200-day moving average. The same thing we spoke about dollar. Remember, the dollar is just the opposite of that. If you remember how the chart of dollar looked at, it's here. Look, it's just the total opposite of this chart. The dollar is moving up, oil is moving down. Like, what's strange about that? Of course, supply and demand plays a role on it, but I just don't like the conspiracy theory. I don't think they are right. But anyway, it's just moved too low too fast. It might stabilize here a little bit and move higher and then pull back. We do not know, but for now it looks like 45 is a good support. I am not going to go and buy any oil stocks right now, thinking that this is the port. This is a falling, not knife. This is a falling kitchen cabinet full of knife. And I'm not going to put my hand here trying to catch some profit. Why? Well, I don't need to catch any profit here. I'm not interested in something that's trading right here. I should have shorted here. I should have shorted here, but I didn't. I just don't want to short it right now because it's just too risky for me. So if oil stabilizes right here, this might give a boost to the stock market and for the stock market to start moving higher again. Anyway, thanks so much for listening, and see you tomorrow.